In this video, I'm going to talk about the economic impact payment number 3. This is also called the rebate credit, and I'm going to go through it. There is a ton of information out there. I'm going to kind of piece it together. Most all of it you can get on the IRS website, but I'll organize it and hopefully you'll know exactly what you need to do moving forward. But most importantly, I'm going to show you how you make sure that you can maximize the amount of the rebate credit. And that's right, you can actually take an action and get more money than you could have if you didn't take an action. So I'm going to show you what this all means, and we'll go through it together. What's going on, guys? Welcome back to the channel, or if this is your first time at our channel, welcome to the channel. And if you could just take a minute and hit that like button for me, it helps the YouTube algorithm, and also make sure that you subscribe to get all of these updates. All right, let's go through this. The economic impact payment number 3 and the rebate credit are the same thing. So the payment is what you got at the beginning of 2021. Right around the March timeframe. That is the same thing. You just get it in advance, where the credit is basically like you're settling up. So if you didn't get the full amount, you're due more, then guess what? You can get more when you file your taxes, and they're just calling it the credit. So if you're kind of confused that you don't qualify for the credit, but you already got the impact payment, that is the reason why. And the amount is $1,400, and that is per person. So if you're single, it's $1,400. If you're married filing jointly, it's going to be $2,800. If you have dependents, take the amount of dependents that you have and multiply it by $1,400. So if you have 2 dependents, that's $2,800 for your dependents, $2,800 if you're married filing jointly. Add that all up, and that would be $5,600. So that is the maximum amount that you could qualify for. Now, you have to have a Social Security number, but there is one caveat to that, or one exception, I should say. And let me go ahead and bring it up on the screen, and we can look at it together really quickly. And let's see where we go, right down here. Now, if you look at, this is the 1040 directions or the instructions. And on this page is the Recovery Rebate Credit Worksheet. Here's the one exception. The one exception was at least one of your members of the U.S. Armed Forces at any time during 2021, and does at least one of you have a Social Security number, meaning just one of you has to be in the Armed Forces and one has to have a Social Security number, and then you qualify for it. Your spouse would qualify for it, even if they don't have a Social Security number. That is the only exception that I could find if you don't have a Social Security number. And it's going to ask you about your dependents as well. Now, if you don't have a Social Security number, you need to apply for it before you file your taxes. That is the deadline for qualifying as far as your Social Security number goes and the rebate credit. So if you are uncertain of that, you have to have a Social Security number in order to do it, but there's your one exception. So the next thing that I want to talk about is you don't have to pay this back. Now, I always like to show you where I find this stuff. So let's go ahead and pull up the screen again and see if I can show you right here. And it says, no, there is no provision in the law that would require individuals who qualify for the third impact payment and or additional payments based on their 2020 or 2019 information to pay back all or part of the payment. If based on the information reported on their 21 tax return, they would have qualified for a lesser amount. So even if you qualify for a lesser amount, you don't have to pay it back. That's what it's saying right there. So you're in the clear if you already have the money. If you don't, that is going to be the credit. And that's how, probably why you're watching this video, to make sure that you're maximizing it, but also to make sure that you're settling up if you're due more so you can get this correct credit. Now, there is some information that you need to pull. And the easiest way, they say there's these forms. Let's see if we can pull these back up. The forms that you need. And I believe it was, where is it? We'll scroll up right here. Notice 1444C or -C. Now that notice was already sent out and you probably threw it away. Maybe you did, I don't know. I don't think I have mine. Notice 1444C, you already have that, but it doesn't matter because you're also gonna get another one, and I forget the exact number for it, but we'll probably find it later in this video. It's like 64.75 or something like that. Somebody can put it in the comments down below, but it doesn't even matter. And the reason it doesn't matter is because you can just log in and get it. So here's where you need to go. So if you just go here, go to the IRS's website, and right on the front page, irs.gov, sign into your account, sign into your online account. I'll just sign in really quickly and show you what this looks like so you can see exactly where to go ahead and get this thing. And there's a two-factor authentication. If you haven't set all this up, I've done another video on this, on how to set it up. If you haven't logged in, it's pretty straightforward, but you know, there's always something that'll get you. 735932. That is my security code. It's not like you can steal it from me. All right, so we're gonna go ahead and log in, and the tab that you wanna take a look at is your tax records. You can scroll down to 2021, and it's gonna tell you your economic impact payment number 3. So you have the information that you need, so you can just go ahead and get it. Now, through the calculations, which we'll talk about, that's the economic impact payment 3 that I just showed you. And if you, by your calculations, you qualify for more, that's gonna be the rebate credit. So that is gonna show up on line 30 of your 1040, and I'll just show you what it looks like. So it's right here, line 30, recovery rebate credit, see instructions, and we'll go ahead and take a look at those instructions really quickly in just a minute. But line 30 is where you're gonna put the additional amount that you'll qualify for if you qualify for additional money. So the next thing that we wanna take a look at is what are those thresholds? Now the thresholds, the income thresholds beside your Social Security number that you need in order to qualify is the income. So they're the same as the other payments, but the phase out's a little bit different. So it is $75,112.5 for, $75,000 for singles. It is $112.5 for head of household, and then it's the $150,000 is your adjusted gross income if you're married filing jointly. Now, the thresholds for the phase outs from $75,000 to $80,000. So if you make $80,000 and you're single, you get 0. That's just, you get 0. Doesn't matter. Doesn't even matter if you have dependents. It's 0. And for married filing jointly, it goes from $150,000 to $160,000. Again, we're going to talk more about this because I want to make sure you get this math correctly done so you can make sure you know how much you qualify for and what you can do to get more. Like I said in the beginning of the video, I want you to get as much as possible. Don't just check the box and go through the motions. You want to do this stuff in advance because if you understand what these numbers look like, then you can start to plan and take action and hopefully qualify for additional dollars. So that's what you really want, right? That's probably why you're watching this video. So from the head of household, it goes from $112.5 to $120. That's the only number I didn't have memorized. $120,000 is the phase out. So what does that look like? Married filing jointly, let's say you earned adjusted gross income of $155,000. So from $150,000 to $160,000, right in the middle is $155,000. You would qualify for half. Now, let's say that you had 2 dependents, same scenario. That means you would qualify for half of the total amount. So let's say that again. So let's say you earned $155,000 and you're married filing jointly, and you have 2 dependents, married filing jointly, 2 dependents, so you're getting $2,800 for you and your spouse, and then you're getting the other $2,800 for your 2 dependents. So $1,400 times 4 is $5,600 because we earned exactly in the middle at $155,000. That's half of that. So half of $5,600 is $2,800. So $2,800 is how much you would get. So what can we do here to reduce our adjusted gross income in order to qualify for more payments? We want that, the maximum amount of the rebate credit. What can you do? You can put more money into the traditional side of your retirement plans. Now, if you're a small business owner, you could do this to a much greater degree with a solo 401k. It's a great retirement plan. Put a bunch of money into it. You can open and fund it all the way up until your tax filing deadline, including extensions. So that's a great way to reduce your adjusted gross income and save for your financial future, save for retirement. If you don't have access to a solo 401k because you're not a small business owner, you're not a sole proprietor, you don't have a side hustle, because you can do it even with the side hustle, you can even get some money into that solo 401k, then you still have the traditional IRA that you can open and fund for the previous tax year up until the April deadline for the traditional IRA. Now you have all the way up until October the 15th, depending on how you're filing, for the solo 401k in order to get it in there, or the October deadline, probably October 15th. But getting it in there to reduce your adjusted gross income. And that is why it's so important to pay attention to this math before you go ahead and file. Now, there is a calculator out there that I did see, so let's go ahead and take a look at it. It's on kiplinger.com. And if we put the math in there, married filing jointly, and this is, you have to know what your adjusted gross income is just so you can see how much you would qualify for. Obviously, this is going to show you what your adjusted gross income is. It's not going to do the whole calculations. You're going to have to go through that when you're doing your taxes. But let's say that we have two dependents, and let's go up here. We're married filing jointly, two dependents, and let's say that we earn $150,000, and I click submit. 150,000, 1, 2, 3. There we go, two dependents, and there we go, our $5,600. Now let's say that we earn 155, just so you can see the example that I ran or spoke about before. That would be a half, because it's halfway in between, so it'd be at $2,800. And let's say we went to $160,000. We're gonna get zero. So at 159,000. So let's just say it's at 159,000, but let's say for a second that you're at 160,000 for your adjusted gross income. Just take 1,000 and put it into a retirement plan, and look at that. You're gonna get $560 back, and that's just from the rebate credit. That's not even reducing your taxes. So married filing jointly for 2021, let's see what that is. Married filing jointly for 2021, and if it's at your adjusted gross income is at 159,000, so that's going to put you in the 22% tax bracket. So 22 cents on the dollar, so that's another $220. So what does that work out to? 5, 6, 7, 780, $780 to save $1,000. You put $1,000 into a retirement plan in this example, and you're going to save $780 in taxes and the rebate. So that's quite a bit. That's a lot. That's a huge amount. So you really want to pay attention to this. Now, if you're further away, let's say you're at 175,000, but you have access to a solo 401k, well, guess what? Then you might be able to save. You might be able to put a bunch more money into that retirement plan and reduce it even further. This also goes with the conversation or the thought of, do I put it in the traditional side or the Roth side? In an instance like this, it makes more sense to put in the traditional side in a lot of instances. Obviously, I don't know your particular situation, but in years where you can get more than just a reduction in your taxes, where you can get these extra credits, because this is a use it or lose it. We're not going to do the economic impact payment credit or the rebate credit every single year. Great opportunity to look a little bit closer at your taxable situation before you file. It's not just about filling out the form, it's about figuring out how you can improve your financial situation just a little bit more. This is not going to be a game changer, saving a couple $100, but every dollar counts. Every dollar will just add to the pile, and you'll build your wealth that way. So that's what you want to take a look at. Don't look over this and think, oh, well, it's just a couple $100. It's not a big deal. Every little thing you should chip away at to make sure that you're building your wealth and reducing your taxes. Put more money back in your pocket. Why give it to the IRS? Doesn't make a whole lot of sense. So that is the economic impact payment number 3, the rebate credit. Let me know in the comments down below if you have any questions on this, anything that I missed that you think I should have talked about. I could do it in future videos, and I will do that worksheet if you want. Let me know in the comments down below. We can go through it, or you can just use this calculator. It works just the same, and it's really going to pull the same information anyways. If you've enjoyed this video, be sure to subscribe and leave your comments down at the bottom.